Hi traders, happy weekend. Welcome to Profiling to Profit. Hey, the theme of this weekend's video is going to be about patience on a couple different levels. Now we're also going to look at areas of interest, of course, in the next week, and then of course some of the news events that's coming out. But we need to talk about patience. There's a couple things that stuck out to me in the charts, and then some of the comments we've been receiving throughout the week, and it really has to do with patience. And so we're going to go ahead and use this time to highlight some things that you can work on and what we're talking about when it comes to patience. But first of all, let's get over to the news coming up. Just as a reminder, tomorrow in the United States it's Memorial Day, so the markets will be closed, and of course nobody will be trading. So probably just if you're overseas, a good time to take off, enjoy an extra day on the U.S. and maybe enjoy your family some outdoor activities or whatever you may like to do. This coming week, everything is going to lead up to the employment situations. We have non-farm payroll on Friday, June 3rd, and that will be a market mover. And I suspect now we don't have anybody speaking except Jerome Powell. But last week we had a lot of Fed heads. Of course, Janet Yellen ended that on Friday, and she had some interesting things to say. We'll talk about that in a second. But this week looks like on the employment situation, all eyes will be on that on Friday. Of course, we're pretty heavy on Tuesday here. Wednesday and Thursday are pretty normal days with regard to the news events. Overseas, in Europe, we have on the 2nd of June, we have a couple different things. More importantly, we have the ECB interest rate decision on June 2nd. So that will be a market mover for sure. So any Forex traders and even the index traders in the United States, this is going to be a market mover. I suppose you could lump gold in there as well because it's going to be tied to the dollar. So everything's going to move with what Mario and his boys come out and say on the 2nd. So keep that one on the radar screen as well. As I said last week, Janet did speak. She had some interesting things to say. She hinted at a rate increase here in the United States. She said inflation would be increasing to around 2% in the near future, probably over the year or 2 years. However, she never hinted at when that rate would be hiked. Would it be on the next go around or the following? A lot of people think that she cannot do it on this next one, but the following one is probably highly likely. So now, what does that mean to you as a trader? At this point, not a lot. Okay, because Janet's news events will make the market move, but it's usually a quick move, and then whatever the prevailing trend or direction of the market at that time would be, usually it corrects and gets back to that prevailing trend. So just something to think about. We never take these speakers too seriously because they just talk. They talk, and of course they do make markets move short term, but we're looking at a bigger picture here. We want to see what the market's going to do over the next week or two, and I've yet to see a speaker make a comment and have the market go in that direction for a long period of time. And now people will say, well, they've been holding the market up. Well, yeah, they've been doing that, but they've been doing that for almost 8 years. So we are in a bull market, obviously, and anything that Yellen says, or she speaks very highly of the market or what she's trying to accomplish, then of course the market will continue on in that direction. So anyway, for this week, guys, again, everything points to Friday, so keep an eye out on that. Let's get into the markets here. Of course, we'll start with the NASDAQ here. An interesting week. Now, this thing opened off again, let's go back and say these are weekly profiles with 2-hour candles. The market just absolutely opened on Monday and just went straight up. And this market punished a lot of people. Now it's interesting because the market went up on very light volume and it just had zero pullbacks. It did try to balance up around that 44.75 area and then continue to go higher from there. So right now we have an extremely high value area on this week. And the point of controls are just super high as well. We broke out of the area we were watching at that 4,400, and I said if we got above there and start trading, most likely we're going to hit this zone And that was a no-brainer. The zone came pretty darn quick. So where's the risk at now, guys? That's what we're asking ourselves. Where is the no-brainer trade? At this point, we believe that the market will continue to roll up and test these highs up and around that 45.75 area. We do have a little resistance here in the 45.41 area. We expect that to pop up, catch that, and then pull back a little bit. In overnight market trading right now, it is Sunday afternoon, or excuse me, evening here in the United States, and the markets are open, the Globex is, and they did gap up during that session and still are trading, trying to break out new highs at 45.22. But right now they're just sort of going sideways, but they have gapped up above this area. So we'll watch that. We feel that anything above the 4400 area is pretty positive to the upside. Now the line in the sand is down here where all this volume was balancing right here. So we found an area 43.63 down into that 43.43 area. That is going to be the line in the sand from there. Otherwise, the path of least resistance for now is to the upside. We still like the short term, our short side long term, but we're not going to fight this thing. We can see here how this can rip somebody's head off pretty quickly. So let's go over and take a look at the ES. There's not much different from the ES to the NASDAQ in this case. It did do the same thing. It absolutely just took off on the Monday morning open, and then of course kept on gapping up and tearing people apart and hurting people. And listen, that's what the markets are designed to do, guys. The markets are designed to inflict pain on you, and that's just the way the markets work. But what we try to help you understand is that there's areas to get involved in these markets where the risk is very small and your outcome is very large, and that's what we're talking about, having the patience. And that's sort of the theme we talked about at the very beginning of this video. It's patience to wait for the good setups, patience to wait for your setups to come to you. Don't be in and out, day trading in the market. You're just going to eat yourself up, and it's going to cost you a lot of money, and of course it's going to cost you a lot of pain. Because remember, just as I said, the markets are designed to inflict pain on you. Now, the other patient portion of this is when you get in a trade is you got to have the patience to wait for that trade to work, and then of course to gain what you want from that trade and let it run. Okay, you've heard it, cut your losers short, let your winners run. Well, it's true. Okay, but you have to have patience for that, and we're going to look at an example here in just a minute. So in the ES right now, again, just like in the NASDAQ, if we got above this area up here around that 2070 area, we thought, hey, this thing's going to go for the 2079, and then of course it most likely is going to kiss and touch this, and it touched it, it consolidated, found some more energy and got up above that. Now right now we are 2098 on Friday close, so we're really, I mean, you know, we're 6 points away from that high. That most likely is going to get touched this coming week, and we're going to see here where we trading. Well, we've been as high as 2103 in the Globex session right now, so just a few ticks away from that, but we like to see that hit in the regular trading hours. So in this case, this area is not valid anymore. The line in the sand now is down around this 2079. We'll draw a line right here. This is the first defense right here, is this 2079, 2080 area. Breaks that down, there's a gap to fill, and they could start eating these singles up down here. And again, the line in the sand is this nice volume area from 2045 up into that 2052 area. We got to watch that. Anything above that area or above just below this area, if it doesn't take you out, then path of least resistance is to the upside. Let's go ahead and take a look here. Wasn't going to look at the TF or the Russell tonight because there's really nothing different in that as well. Pretty much the same story in that. It is a little bit closer and did finish up on its highs again. And so we are just a few points away from its recent high of 1153.7. Again, if you look at the value area here on the weekly, it's got to stay above this value area. Okay, if it breaks down below the value area here, then it has a chance of falling into this zone. and if it stays below this, if it gets below the zone, obviously we have a date with the these lows down here at 1082. But right now, from the looks of it on Friday, or actually all last week, this is a strong market to the upside, and it's got something to prove. We're not exactly sure what, but it does. And again, don't inflict your thoughts into the market. And what we mean by that is this: just because you think something should do something, don't get stubborn about it, and for God's sakes, don't get married to your trade. If it's not working, get out of the trade, define your risk, wait, be patient for your next setup to come, and when that happens, make sure your risk reward is there, and make sure your risk is defined. Okay, you do that, and you will have a good opportunity at making some good money and building your accounts out. All right, so nothing really to look at in the Russell. Let's go ahead and look at some other markets here. I want to visit the euro. Obviously, we have ECB announcement coming up this next week, but the euro, we've talked about this thing ad nauseum, and so I'm now remind you one last time. This is a great pattern here. We love this. Had a nice bull flag. Everybody thought, oh my goodness, this thing's going to the moon. And then of course they poke their head out, and then they bring it right back into the balance area. And of course, there's your risk is defined there. It has a great high opportunity or high probability of going down and testing that lower range. Not only did it test the lower range, but it absolutely broke it out and went crazy. Now, here's where patience works for holding your trades. Okay, this is probably the biggest psychological problem that new traders and even older traders have, is when they get into a winner, they don't want to see that winner go into a loser, and we totally agree. However, they don't hold on to the trade long enough. Most people who got into this trade up here when it moved back into this balance area probably cut the thing short down around the lower area here. Well, that's a place to take some profits possibly, or even move your stops up, but then you got to see if there's more energy to this trade, and could it go down and take out make new lows. And it did. Obviously, for 2 straight weeks we've had new lows, 1, 2, 3, 4 straight weeks. So right now this is a short-term downtrend, and this closed at the very low on Friday within a tick or two, and it looks like it has a date down here with this what is that? That's the looks like 103.69. Is that right? Yeah, no, that's not right. I'm sorry, I can't see this on this. I'm going to have to pull it out a little bit. Sorry about that. So 108.8. Okay, so it looks like it has a date down there. However, remember, the ECB is putting their announcement out. I've got this area up here, risk area. If this thing decides to bounce up here, if this risk area holds, then we can take this out and we could see some very nice movement. Watch for a little bounce early in the week, and then they'll grind it sideways before the announcement comes. However, if you are in this trade and your risk is right above this, you should either cover the position before the announcement, or make sure your stops are moved properly, and then you're defined as risk. And again, we'll be out of the trade. If we're in a trade, we're going to get out of it before an announcement like that. That's a pretty big announcement. So Euro still has some opportunity in it depending on what happens in the next few days. Let's go ahead and take a look at the gold trade. Tried to get a video out to you. Whoops, wrong one. Tried to get a video out to you earlier last week, and it failed. I did a bad job, so I apologize. This is the exact same pattern that we saw in the euro, and we talked about this. We said, hey, listen, if this thing comes back into this range, which it did, it poked up, got beat down pretty hard, came back into the range in the balance area. It actually gapped up and came back in too, which is that's like the double whammy. That's like the gift from the trading gods. If that were to happen again, your risk is right above there at that 1290.91 area, and then it's all the way down to the lower balance area, which it did. It went down, took that out. I was going to try to get a video out showing that it was down there, and I didn't get it out. My apologies on that. However, right now we did bust it down and continues to make new lows. we're coming up to some important areas down around this 1209 area, and then we have another area at 1202. And when we have this gap down here at 1191, this thing could be gunning for that gap. And then we have some more gaps if we pull this out just a little bit more. When this thing was running for the roses, this thing left a lot of gaps unfilled. So we have two down here that we could end up filling. There's no doubt about it. Gold is weak right now. However, they could also roll this back up and chop sideways a little bit. Remember, we talked Soros and some of the bigger boys are playing gold long term, and they may be right, because remember, their hold times are a lot longer than ours, and they can throw more money at it and hang on a lot longer. They may be talking, hey, we won't see another upturn in gold for another 3 or 4 months. We don't know. Okay, we don't know what's in front of us. We have just a good idea if there's a setup like we saw here, and the profile is speaking to us a little bit with what we can do and where our risk is. That's all we can do right now. If you have the capital to get in this thing long term and hold it for a year or two, hey, congratulations. That's a different play than what we're working on. So all right, so for now, right now, if you're not in this gold trade, it's not the place to be selling it down here. Let's wait until something comes up that we can define some better risk and look for some good targets down here to the low end. But right now, the risk is not available for us. We need some pullback into this thing, and we need probably need to see this thing go sideways a little bit and develop a balance area. All right, guys, this is the biggest example I can show you of patience in trading. We talked about this. Josh put a great video out talking about this $3.78 area. We had many multiple point of controls coming across this area in lower value areas, 1, 2, 3, 4 of these things, actually 5 you could say. And we said this is the line in the sand. Anything above this, we're looking for risk to be able to take out this well, actually it was the $4 range. And the $4 range was this recent high all the way back here in September of last year, $3.99. Well, it didn't take long. As soon as we ended up trading above that, what was it, 2-3 weeks ago, it was an area to get long the trade just below this really this nice balance area, or the high volume node, should we say. And it was a no-brainer at that point. There was no risk for us at this. Well, there was no risk at all. It just took off. It sort of tried to balance here, and boom, took another big hit. Now, we did gain our target up here at $4, but here's what we're talking about, as we showed you in the euro, is it's a place to take some profit. And of course, if you do need to cover and want to cover, that's totally understandable, but you got to let sometimes these things run. So here we are, we're up here at $4.13. So this thing has taken a 13-cent run from where our original target was. That's a big move. That's a nice move in the corn. If you're still hanging on up here at this number, hey, congratulations. Definitely control your risk by moving stops up. And if you have more to peel off, let's find some areas for you to peel that stuff off. And then eventually you will need to cover, because not all markets go straight up and straight down. So anyway, good example, guys. Patience to wait for it. We had to wait a while for this, almost 1, 2, 3, 4, 5 weeks to get this trade off. But once we got it off, we hit the target pretty well. Now, if this trade didn't work, it would have probably rolled over and got us pretty quickly, but it didn't. It just got in and took off at that point. Same thing with soybeans. Let's take a look at soybeans here real quick. Soybeans, when it broke out, pretty similar to corn back in April, this thing was off to the races. And you can see here we balanced, we rolled up, and of course now we're trying to take out those recent highs. Will look like we did by a tick or two. But right now, path of least resistance is still to the upside. If you are not long any of these grains, whether it be corn or soybeans, this is not the place to get long in here. We need to wait for a better area to define our risk. However, you can just see, listen, patience would pay in here. Patience for one to get in the trade, and patience to hang on to it, guys. I think that's all I got this weekend. Again, let me just remind you that we are in a holiday tomorrow on Monday here in the United States, so we have a short trading week. We are rolling into June here this week as well, so just be aware we are at the end of the month, so there could be some markups, and this could be part of that move. Also, just a quick I don't say it's a lesson, but just a quick observation. You know, you heard the terms, you know, sell in May and go away and all that kind of stuff. And markets are dynamic. They're always changing. They're always balancing. They're always probing. They're always auctioning. And you know, that may be true. You know, we may start to see a sell-off here in the summertime. We still think there is a sell-off possible. It could come, you know, could come next week. It could come in June. We don't know, and that's what you guys have to understand. You don't know when these things are going to happen. You can only trade what's in front of you at this moment and this time, and it's important to be aware that, yes, that's a catchy tune. Hey, you know, we got a Santa Claus rally in December. Hey, we got a, you know, sell in May and go away, and hey, there's all kinds of little things like that, and sometimes they do work. But that's not something you can trade on and control your risk. The best thing to do is to understand how you control your risk. Market profile is a phenomenal way of doing it. And then, of course, from that point, wait and be patient for your setups and your areas of interest that you can get involved in the market with a small amount of risk and a large amount of opportunity. And with that, guys, if you need help, I want you to go on over to marketprofiletradingacademy.com. Go ahead and hit the free resources button here. We have lots of resources. We're always adding to it daily. Okay, you can check out the trade execution, psychology, look at all the videos, trade plans, etc., etc. That's all there. It's for you free. And if you have any questions, just go ahead and give us a holler, drop us an email. We'll be glad to help you out, get you back to where you need to be. So other than that, guys, have a great week trading, and then we will talk to you next week.